Hello, everybody. The new big buzzword in taxes and accounting these days is cryptocurrency. I get a lot of phone calls and emails on this. Everybody wants to know how to use it. How does it affect their taxes? A lot of people want to know how they can use it to avoid taxes altogether. And I now have to ask each and every person for whom I do taxes whether or not they bought or sold cryptocurrency. So, one, I can determine how it was used, and two, encourage my clients to report what they are supposed to be reporting. Today, I'm going to talk about the generalities about how the IRS is really categorizing cryptocurrency for tax purposes. And then I'm going to get into a few details on how the taxes change based on how you use the cryptocurrency, but I'm not going to get into it all. So before I get into anything, what you need to know is that if you are dealing in cryptocurrency at all, you need to be talking to a tax professional about it, and then make sure you give them the time they need to do their due diligence, to research it, to make sure that things are being done correctly, working with their softwares, because it's emerging and we are all learning this on the fly. So it's going to be very important that you work together with your tax professionals to make sure you make the best possible choice when you are dealing with it. I'm going to start off with the generalities of it. An example is stock. We're all familiar with stock. You buy stock for a certain amount, you sell it for a certain amount, and you either incur a capital loss or you earn a capital gain. And how it is taxed is based on how long you held on to it. If it is short term, less than a year, the taxes on it are going to be whatever regular income tax rate you happen to be sitting at when you do your taxes that year. If it is long term, meaning a year or more, it is going to be taxed at capital gains tax rates, which right now cap out at 20%, although most of my clients are only paying about 15% on it. Pretty simple. Cryptocurrency is going to be treated exactly the same way when it comes to your taxes. But again, I say the same thing with stocks. You need to be talking to your tax professional because it can get you into some tax trouble if you're not fully prepared for the fallout that comes by making large capital profits when you sell those kinds of commodities. I am now going to talk about some of the specific ways in which cryptocurrency can be used. And the first one is super simple. Just like stock, you sell it for cash. You exchange it for cash. You paid a certain amount for cryptocurrency, and then you received a certain amount for cash. You're creating either a gain or a loss when you do that. And I just want to point out that the basis of the cryptocurrency is not always exactly the same as it is with stock. Okay, so cryptocurrency, there's a fee to buy it, there's a fee to sell it. So if you bought a crypto coin for $10 and it costs you $2 to buy it, we're at $12. And then when you sell it, it costs you another $2 to sell it. Now the basis of your crypto coin is $14. So just keep that in mind, that the fees need to be included in on that. Okay. So when you do that, it is subject to the same rules. Is it a short-term capital gain or is it a long-term capital gain? And it all depends on how you use it. So that is the simplest way of looking at it when you are exchanging it for cash. Okay. Now, initially, people thought that this was the only way in which you created a taxable impact with selling the cryptocurrency by exchanging it for cash. That's no longer true. So I'm going to get into some of those details here too. Okay, so exchanging cryptocurrency for another property. And we're talking about a capital asset, which is essentially something very large, generally speaking, whether it's equipment you purchase for your business or the home in which you're going to live. Now, I don't know that cryptocurrency has been used to buy a house yet, but I'm sure it's coming up in the future. So that will create a potentially taxable event if the cryptocurrency you purchased at a lower value than the property you're actually receiving in return. If that property was worth more than what you sold that cryptocurrency or purchased the cryptocurrency for, you're creating a capital gain that we need to be very careful about. The other thing you need to be really careful about in all of these instances almost is that you could potentially be increasing your tax bracket. So you may be only paying 20%, 15% in capital gains tax on that capital gain. But if it increases your tax bracket as a whole, you now owe more taxes on all of your income. So just be careful and just know that when you're doing these things, The repeating theme in this video is going to be you should be talking to your tax preparer before you do it so that you can understand and prepare for the outcome when it's all said and done. Now, another thing that is starting to happen more and more often, especially with these larger progressive companies, is receiving cryptocurrency as payment for goods and services. Now, that's pretty crazy to me, and it's going to create a lot of other complexities, but I also know that we're not going to be able to avoid it. So we just might as well jump in and accept the fact that cryptocurrency is probably here to stay. Now, if you receive cryptocurrency as payment, capital gains is no longer going to be part of the story here. They're going to treat it like regular income, and that cryptocurrency is going to be worth whatever the market value of the product or service you are selling is worth. So just remember that it gets caught up into your gross income. It's treated like regular income and will be subject to regular income tax brackets, whatever they happen to be. All right. Now, another one that people have been trying to do, and the thing is it does make logical sense, is something called a 1031 exchange for cryptocurrency, which is a like-kind exchange. So exchanging cryptocurrency of one type for cryptocurrency of another type. Now, we do this with property all the time, especially in real estate, where I see investors will take an investment property that they have and sell it and then reinvest that money into a similar property. So for example, a residential property into a residential property. Now, what they do is they defer capital gains tax, which means they're kicking that can down the road. They don't have to pay it now, but they may have to pay it later. And honestly, a lot of people argued that this is exactly what they were doing with cryptocurrency. But right now, the government does not agree. So if you are trading cryptocurrency for cryptocurrency, please know that a taxable event may be created by doing that. And again, what am I going to say? Talk to your tax professionals. If you are dealing at all in cryptocurrency, talk to your tax professionals. All right, so the last thing I want to talk about and how it is taxed is blockchain. Okay, so some of you may actually be mining this and earning fees in the form of cryptocurrency. And then it winds up on blockchain. And for those of you who don't know what blockchain is, and it's something that's super complicated that not even I understand, but in simple terms, it's essentially a ledger of all the cryptocurrency. Okay, so if you are contributing to that ledger, meaning you are mining cryptocurrency that winds up on blockchain and you are earning money from it, that will be taxed at regular income tax rates. So keep that in mind. It's a lot like business. So if you are earning that, but you have expenses that go into mining it, you need to be keeping track of all of that because it's probably going to wind up as a Schedule C on your return if you don't have a business that's separated from yourself personally in any way, shape, or form. Okay, so there we go. That's what I have. There's a lot more to it. There's a lot of things I didn't even touch on. So again, I know I am repeating myself. If you're dealing in cryptocurrency at all, please talk with your tax professionals. And again, remember that they're probably going to have to spend some time researching so that they can get the most detailed, accurate information as possible. This thing is a moving target. It keeps changing. It's also emerging, so it's brand new, and we're all having to learn this on the fly. So just keep that in mind, work together with your tax professional, and get things set off on the right foot. I think I'm probably going to have Nicole do a video on how to account for it in your books for those businesses who are thinking about using cryptocurrency as a form of payment as well. We'll have to figure that all out. Now, next week, I am going to be talking about when you know it's the right time to switch accountants. It can be a hassle and it makes it very difficult for a lot of people, but somebody asked me recently, my husband's not happy with the accountant we're with. He's the one who kind of handles this, but he just doesn't want to deal with the hassle of moving accountants. What can I say to him to help him move to you? So I'm going to answer that question in the next video. Take care, everybody.